morning, everyone. This is Gail with TradersHelpDesk, and I just wanted to go over support and resistance, just a quick overview. You can see I have a Eurodollar 60-minute chart, and I have already marked the highs and the lows on the chart. Now, highs and lows are extremely important because this is what causes the waves in the market. So anytime you have a price bar that makes a high, then you're going to have resistance there. Anytime it makes a low, then you're going to have support. If price breaks through the support, that then becomes resistance. So as you can see, I've already marked the highs with these blue lines. And what you're looking for is when it makes a high and it retraces and it goes back to the high, it should exceed that high if you're in an uptrend. Okay? If it does not, that means it's going to go down and it's going to test the prior support level. So you can see over here on the far left-hand side of the screen, price makes a low, comes up, makes a high. I draw a line off of it. Then it comes back to test that line that it just broke through. And this is what price does, I would say 80% of the time. Breaks through, comes back to test to make sure it's going to support. And this is where we get a reversal bar. And then it goes up, it makes another high. And this high forms a reversal bar. This bar in itself is a reversal bar, and it's also confirmed here. It goes back to test the area that it broke through. Then it goes up again, unable to break it, and it comes back down and forms a new low. It doesn't quite break through these lows. You can see that it closed in between the two blue lines. And it comes back to test again here to see if it can actually break through. It cannot, forms a reversal bar to the upside and goes back up to test here. Now here you get a reversal bar to the downside, and then you get another bar. This is, well, maybe we can break it. So if you were in a trade and then you got this bar, you're out of that trade because price is telling you that this area is actually going to support it now. It goes up and it tests the high again, forms another reversal bar to the downside, breaks through these two levels, but again, it's going to retest. And this is your retest, and this is where it's actually going to move more. You then get a low here, and it's a reversal bar to the upside. Remember, it just broke through these levels. What's expected? It's expected to test those levels, which it does here. Breaks through again, test again, and then breaks through again here. Now, in this case, this is a very wide bar, probably created by a news announcement or something similar to that. And when it breaks through, and that's a wide bar, I mean, you look at that bar and you go, oh, wow, that is a really big bar. You can expect a retracement of at least 50%. In this case, it retraced all the way back up, tested the same areas again. Now, this is significant because it has tested these areas numerous times. The areas developed previously is tested here, again come back and tested here, and then it tested here. Now this is also a reversal bar to the downside, and that is confirmed by the next bar. We then get a lower test here, forms a reversal bar. In this case, it also forms a reversal bar. This is what we call the twin bars. It goes right back up, becomes right back down. And again, this is what causes your zigzag pattern that a lot of people use. Now, is the euro dollar in a trend right now? No, it's not, but this allows you to follow and potentially trade it even though it's not trending. Okay, you can see as they tested this one here, they tested again here. Both times formed reversal bars to the downside, meaning that price was going to go down. Now, if they happen to break through this area, then we could potentially see it move down to the 1200 area. Now I shrank my chart up a little bit so you could see this. If it does come down to the 1200 area, you can see you have a lot of potential support there. With the rate announcement this morning on the Euro and the press conference, if it manages to break through this area, more than likely it's going to come down here to the 1160 area. So the area that I'm really watching is the 1200 area to see if price can get there. You can also see a lot of resistance here, unable to break through. To me, the most natural place for price to go would be to test all of this support right in here. So just a brief overview of what I anticipate. Now I do have an indicator that actually will highlight all of these lows for you. In the highs, it's called the Trend SR. And if I put that on the chart, you can actually see that it's going to draw dots off of the highs and lows that are going to act as support and resistance. So in this case, you can see the dots are coming off of the lows, and that's what I'll look for, is a line of dots that are coming off of either the high or the low. The red ones tell you that it is a high. The blue dots tell you it is a low. And that way I don't always have to draw these lines on my chart. For new traders, I always recommend that you draw the lines. And then if we actually add in the Stochastics Indicator, we know exactly where to read the highs and the lows and the support in the stochastics. So I'm going to add that to my chart. And as you can see now, as this high was being made, this is showing you regular divergence, which is also called trend divergence. This high is higher than this one, but price was actually higher. So if you draw a line from here to here, this is going up, this is going down. That's standard divergence. You can also see on the lows, when this pulled back, you're making lower lows but higher lows in those stochastics. This is one of the easiest divergences to read. In other words, if you're making lower lows in price, you should be making lower lows in the stochastics. In this case, you're making higher lows. So that tells you you have standard divergence. I also call this trend divergence. Over here, you're making higher highs, but on the stochastics, you're making lower highs. Now that tells me that they're presenting an opportunity for sellers to come in and take control of the market. And over in here, as you can see, you're making lower lows, but the stochastics is also coming down. So I would expect that this is going to go lower than this over here, in which case I would expect it to come down to 1200. And in between there, we may actually have a retracement and then come back down a little bit. And it's going to make a new low, but it's going to give you this divergence here. And these are things that you need to watch for as price is moving. Now for hidden divergence, you have it right here, very, very minute hidden divergence, in that price is making a lower high, but the stochastics made a higher high. That's what we call hidden divergence. And that tells me that the market should go down off of that hidden divergence. And in this case, it was a lower high combined with a higher high in the stochastics. Again, just a really kind of simple way for you to read price with support resistance in the stochastics.